Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Pause, Bill, round, and let's start. Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. I always want to welcome new subscribers. Disclosures are very important. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's go over trading psychology, very important. The economy of control, right? The idea of process versus outcome. I encourage you to have a trading plan, written down the rules, and keep a journal, right? Very important to keep a journal. In terms of trading rules, the most important is position size, right? A number of positions. You can be in, you can be bullish, you can be, sometimes you're on the wrong side of the trade. So you want to make sure that you know what your maximum drawdown in your portfolio is. So number of positions, I think positive visualizations are important tools that can help you determine the size, right? So let's look at spiders. So we have a key support level, right? We talked about 430, well, yesterday's low, 431, right? 431, 432, that we've been trading around this position, this level. This is the breakout of this uptrend, right? Above the uptrend since October. And it's also March, August high that the spiders was able to break above that level. So this is a key level, right? Market, as long as we're trading above this level, you don't really have the top. We could, retest 444, we can trade marginally higher, but that's the new channel. So you're bullish and you think this level will hold, right? And we can at least retest 444. So you have 435 to 434, 444, 10 points to the upside, right? So you have 10 points to the upside, right, if you're bullish on the market, and to the downside, 436, 5 points to the downside. So risk versus reward makes sense, right? Kind of wait for a pullback. We're slightly down pre-market. You buy and you have 10 points to the upside, 5 points to the downside, right? If you're short-term day trader, or even if you're long, medium-term trader, because I think if this level breaks, you're going to have a pretty quick pullback to at least 426 level. I propose to have not to risk more than 2.5% of your portfolio, which is $250. That's if you're holding this for a few days or few weeks, right? If you're if you're doing day trading, it should be less than 1%, but you need to have $25,000 minimum. So it's still $250. So it's kind of a magic number for what I think is average account in Tradespoon and Yellow Tunnel, or minimum account if you want to do day trading. So -5, -10 points. So that means if this is your stop level, then what, how many shares do I buy? Well, just 250 divided by 5 is 50. Right? So you can buy 50 shares. 250 divided by 10 is 25 shares. So that's position size. That's the determination. The most common mistake we all make, we always trade 50 shares, or we always trade 100 shares, or we always trade 10 highly correlated. So if spiders breaks below 432, you probably, even if you're trading, let's say, NVIDIA or you trade in Apple, you probably want to also exit those positions. And if you do, you probably don't want to risk more than $250, right? I usually break the trade into two, right? Doing dollar cost average, so it becomes $100, no more than $100, no more than 1% risk per trade, right? So that's the most important routine. I would document that process in your journal, right? Write it down. You can, the more you write, the better. Ask yourself why entering this multiple times. If you see a risk reward and you see support and it makes sense, okay, that's great. But if you just have fear of missing out because the market is up 35% and it'll be up another 35% and you're not doing anything, well, that's probably not a good reason, right? Kind of a herd effect or fear of missing out. You want to have, we're probably still trading in traders market, whether we're trading sideways, up or down. It's going to be a traders market, meaning that we're going to have rallies longer than everybody expects. We're going to have sell-offs longer than everybody expects. So it's important to be disciplined tactical trader with well-defined risk levels and target gain and stop losses. The most important, positive negative visualization. Right, the goal is to avoid emotional trading. Right, I didn't find any other ways of doing this. And compounding investment. Right, volatility is low. VIX is at historically low levels. We haven't seen them before the pandemic. That means that market spiders are not going to move more than a day, right? It's been like this for a few months. So if you're doing short-term trading, you hold in position a couple hours, couple days, probably 0.5% to 1% is what you can expect, right? Unless you're constantly trading something that's very volatile. I mean, I don't know, NVIDIA or, some meme stocks or, Bitcoin. So something, or, Forex. Okay, you like to trade something volatile, the rules apply, right? You don't want to risk more than $250. That means that you have Sam, Timothy. Welcome back, Marcus here. Dar, Victor, Bill. Okay, so in terms of trading, pretty impressive rebound yesterday, right? Still, I think, we're at the end of the quarter, so there will be rebalancing. People, a lot of institutional traders, money managers will have to reposition going into the next second half. Maybe take some profits, right? Technology is up 35%, one of the best start of the year in history, right? It usually doesn't rally 35%. I'm not sure if it's going to have effect on the market. Maybe, maybe not. Depends what he says. He spoke at length in the past few weeks, so I'm not sure if there'll be any surprises. But at least I don't think he's going to say anything new. Yields are stable, right? 10-year yield kind of since beginning of May, kind of trading in this range. So yield is range bound. That means market is going to be range bound, right? I think bond market looks like we're giving up most of it today. We talked about spiders are slightly down pre-market. Small cap stocks are slightly down pre-market. Any questions? In terms of trades yesterday, let's see. Did I do anything with closing bell? Micron. So I did credit put spread. Probably close to an end, right? We had a pretty sharp pullback to 200-day moving average. You know, we did have a broad-based rally yesterday, but still pretty bearish. Not a pretty bearish setup, but I think this rally from March that we had in small cap stocks is coming to an end. Now we're building the top. We may or may not revisit the highs, but you know, again, little room to the upside, more room to the downside. My goal is try to get out of the bullish part of the call condor at 350, take a small profit if possible, and trying to exit out of North Grumman 452. Let's see, what is it trading? $448. Okay. QQQ down 0.5%. Semi is down 1.5%. Spiders slightly lower. Small cap slightly lower. And yield slightly lower. TLT slightly higher. That's the usual correlation between yield, equities, and bonds. And looks like we have a pullback in China, platinum, you know, materials. Regionals are pulling back, and most of its gains. I mean 376 is a key. I mean, this is the for, you know, short-term support. I would watch this level because we didn't break through this level for the past couple of. If we do drop below 401, I would watch that level. What else is interesting? And crude oil, right? Crude oil is sitting at the 52-week low. Also a puzzle for the bulls and okay. Let's see what else. So looks like we're giving up some of the gains from yesterday. Just a little pullback, nothing major, except semiconductors maybe. That's about it. Okay. That's for WBA, Walgreens, and XLF. So still big, Bank of America or Citigroup. So they're obviously winners and not winners, but we'll see how the earth season looks in the next couple of weeks. So silver and gold, Jeff had a question. Yes, silver, gold. Silver and gold can trade. Silver and gold are separate, right? They can trade as material, or they can trade as a hedge for inflation, for recession. So silver, I think, very sensitive to interest rates, very sensitive to dollar, right? Dollar pull back significantly, silver pull back significantly, right? So you do see that correlation. So I think if dollar gonna rally, which is my core scenario, that we will not break, right? I think we're still gonna have some kind of a recession and more meaningful pullback. The only way it will happen if the dollar doesn't break down, right? It holds the 52-week low, and it actually needs to rally, right? To at least year-to-date high or even higher, maybe 107, 108. So if that happens, we will silver and gold, you know, medium term, you know, for the next few months is a good hedge for market correction. If we don't have recession, we don't have market correction, if the earnings is great, if the Q2 is better than Q1 and the companies are growing their revenue, then, you know, dollar is going to collapse and, you know, silver is probably going to collapse too. So it just depends what your view on the economy is. I don't think it has to do anything with technical analysis, right? It just, the elephant in the room is our earnings and revenue. Our earnings and revenue in Q2 will justify the multiple expansion. If they don't, market is going to sell off. If they do, market is going to rally. So gas, it's kind of different, right? There's Russia-Ukraine war. There is, you know, a lot of seasonality in gas, right? You know, depends on driving season and, you know, all these. The chart to me looks extremely bearish, right? I know a lot of you are buying UNG. You like this volatility going from 7 to 30. Just remember, it has a lot of underlying assets in UNG are options, futures, options on futures. It's very volatile. I mean, since June, it looks like it's a little bit stronger, right? At least you're not making any lows. So to trade it, I think it makes sense, right? You can basically say, listen, if it drops below 6, I'm out. So I'm risking that. What if it's colder? What if the Russian-Ukraine war is still on? Is there enough supply of liquid gas from United States? Are these things kind of hitting any low? So that's a good news for gas. Bad news is it went from 34 to 7. Right? Gold became very volatile, but looks like it will go back up. Ian, NVIDIA. If you're bullish on NVIDIA, yeah, call spread is the way to go, right? If you think that this level will hold, right? Well, I don't know what the time frame you're asking about, but you could basically say, listen, bulls are in control as long as NVIDIA above 375. Looks like it's stabilizing, right? So you can do a call spread, right? Whatever, 375, 395, 380, 400 call spread. If you think this level will hold. Right, but you have to be bullish. I'm bearish on the market. I would not chase this rally because I think, again, well, if for the trade, it's kind of the same, right? We could still visit 440. There's no reason not to think that we will not. So that's 30 points to the upside, and to the downside, 30 points to the downside. So it's kind of a flip of a coin, right? On July 1st, we could be at 375, or we could be at 440, right, in the next week or two. Hard to say, right? I mean, you can, if you're more tactical, aggressive trader, you basically say, well, I'm going to get out if it's below 400, right? Risk 10 points to make 30 points. Okay, maybe that's better, right? Because I think right now it's a flip of a coin, right? It can go to 440 or it can go to 380. You can see kind of semiconductors just in general, building top. Micron announcing earnings today, right? That could be that catalyst, right? If their earnings do not justify this rally, there'll be a sharp pull in Micron, probably can pull majority of the semiconductors down, or vice versa, right? If they hit a home run, because everybody needs chips to support generative AI, then we're gonna have strong rally in Micron, and that will probably push all the semiconductors higher. So it's kind of a binary event, right? If you put in NVIDIA trade, probably Micron will affect most, chips, especially the one that participated in this AI move. Like AMD, right? AMD looks suspicious, right? It looks like double top, completely closed. Nice. Love Costa Rica. Great. I hope you had a great time. All right. Did I cover all the... Okay. All right, so let me finish the Micron trade. Let's see. Okay, so I'm at Micron put spread. Well, down it's going to be of 15, so it's actually not bad. I mean, it's higher than it was, right? Much higher than it was here, but not a horrible multiple. What's Micron trading at? I don't think there was any major CBA, right, yesterday. These were short-term trades, right? Usually it's still I don't open close in the same day, it's the next day. So the time frame is 1 day. Usually the time frame is 1 day. I sell iron condors, right? Sometimes I do trade, like as I explained, spiders. I gave spiders or QQQ a lot of examples. Let's say, you look at 1 hour chart, right? You basically say, well, I don't think Micron is going to deliver a strong earnings. I don't think Powell is going to say anything bullish. We're not going to break 438 level, right? Or we're not going to break 437. So you can go into this options, right? Weekly options expires on Friday or expires tomorrow, and sell 438 call, right? If we do reach 432, if we retest 432 level again, you basically can say, listen, I think this level will hold. We're not going to break it, so I'm going to sell put, right? So that's a very popular day trading strategy, right? You identify some kind of a key support and resistance levels. We talked about this every day, right? Today, model basically says we're not going to break 436 level and we're not going to break 430 level. So at 436 in the morning, or even pre-market session, then you sell, right? You sell call. If we pull back close to the last couple of days session low 432, then you sell a put, right? So that would be a strategy. Right now we're in the middle, right? 434. We could bounce 3.5 points, or we can drop 3.5. Sorry, when does he speak? 9:30 a.m. 8:30. So Powell started to speak, right? Did he say anything interesting? Is anybody following his? So let's see. Powell. What does Powell say? Give me 1 second. 1 second, sorry. Not a lot. Not a lot of pullback, just kind of a healthy. And rates are flat. So at least as of right now, I don't see a lot of new information. Bob, yes, Eli Lilly, they're in the news again. They're getting more and more approved, and it is incrementally continue going higher. I think long term, this is this is #1 health problem in the United States, and probably in Europe also. Well, less in Europe, but definitely United States. So I think this is long term a good investment. But again, that usually it's not a one-way trade, right? You have elevator up, and sometimes you have at least escalator down. So I don't think it's going to be elevator down, but if it's escalator down, then you want to add to your position. So you got to be tactical and break this trade into a bar, because short term it's overbought. But it's definitely in the news. And you can see Pfizer was also in the news, but then they pulled back sharply. And the reason is because it was oral pill, and they thought it was one day. Now they're saying it's not effective. They need to do it, twice a day instead of once a day. And all of a sudden, you have elevator down, right? So just keep in mind that, based on the news, you will have large movements in these stocks. Come from Carmen. I mean, when you do day trading, you can sell out of the money puts and calls. You don't have to own them, right? You can sell naked, or at least credit put spreads, credit call spreads, right? You can sell credit put spread, credit call spreads. Buying put and buying call, you also can do it, but you have to basically it's the reverse. If I'm selling a call, right, I need to buy a put. But if I'm buying a put, unless it's deep in the money put, it has time premium. So when you sell a call, time works on your side. When you buy a put, time works against you. So the spiders have to continue. If I'm buying a put right now, right? Spiders say 438, 437 call. Market just doesn't mean I'm going to make money as long as it stays, below 438 level, right? So time is on my side. But if I'm buying put, I'm basically making a statement that the stock will continue to go down, and it may or may not, right? If you think it will continue going down, especially sharply, right after the sell-off accelerates, then yes, buying put makes more sense. But if you're not sure, if you think this is oversold and maybe you're just going to bounce around, right? We do have a key support level at probably 434, right? This is a breakout, previous breakout. But if you don't think we're going to break below 434, then buying put, you're probably going to lose money. But selling a call, as long as we don't have a sharp reversal, you'll make money. So that's the difference. Paul just said he could hike rate in consecutive meetings. Right. He's reserving. That's also nothing new, right? I think Street expects 1 rate hikes and then pause. He said it could be 2, and then it's data driven and based on, inflation data and based on wages, right? If the wages are not going down and unemployment rate is not going up, he might do more than 2 rate hikes. You just don't know. All right. Yeah, looks like Treasury is kind of knocking on the door of this 104 level, 103.5, 104 level. So I would watch this level. I would watch this line, 103.68 on TLT, and so, I mean the opposite on 30-year yield. Right? 380, right? It broke below that level a couple of times. We'll see. Right, and dollar rallies. So you kind of have a familiar trade, right? Dollar rallies, TLT rallies, technology pulls back, and silver is also down. And hopefully silver is gonna start rallying at some point. And you have a drop in copper prices, platinum prices, China's pulling back. Let's see how's the mega cap doing. Mega cap. Carnival Cruise made a round trip after the earnings, actually continue going higher. It's interesting. Tesla continues to go higher. And then that's about it. Any questions? We're at 906. All right, Discord guys, thank you. Yeah, RCL is leading Carnival Cruise. It's a pretty big reversal after sharp pullback after earnings. So That's a pretty strong move to the upside to make it calls. So, but I usually, if you're new to trading, I would not sell naked puts and naked calls, but you can do spread, right? You can sell a call spread, you can sell a put spread. Bearish, right? That's also looks like this AI trade is, on pause. I don't think it's gonna. I mean, it can obviously some 50-day moving average, so it could bounce back. But probably not gonna break 127. We have probably lower high, if I have to guess. So this already looks like the best part of this rally is behind us. All right, so I'm not too optimistic on Google and Amazon. Amazon's still strong uptrend, so that can continue actually making higher, because it's doing a catch-up trade, right? It hasn't even reached the August high, right? So Amazon is behind the rest of the mega cap technology companies, right? It's hasn't even reached last year August high, where most of the mega cap are trading above that level. So Amazon can continue going higher. Google probably not going into the earnings. That FCX, again, FCX is part of the cyclical trade, right? Copper, gold. So cyclical trade, I think it's the best part of the trade, just like small cap, right? Whether you're buying small cap or you're buying copper, it's the same trade. So we already have a pretty meaningful pullback, right, to the 200-day moving average, 50-day. We're bouncing back, pull back. I think the best part of this rally is over. Right? I mean, we can make maybe incremental highs, but I think there's more room to the downside, to the upside. Right? This is one of the reasons I want to get close the bullish small cap stocks. And small cap and copper, all the cyclical names are highly correlated to each other. And some better than others, but that would be the 426 for June. Carmen, so the question on 6 months, right? On 6 months, you do have a pretty large difference between 426, 407. It's actually not that large. It's actually small and reflects VIX. Because this is 6 months prediction, this is prediction for the months of June. So model basically predicted for the entire months of June, we will trade between 407 and 426. See that, we were as high as 444, but we are pulling back and basically trying to gravitate toward 426 now. We were knocking on the door of 430. There's only 2 days left, but still. So this is pretty narrow range, right? For the entire months, basically model predicted 5% range that the spiders will trade, and it ended up $416. So it's still, the range was 40 points, narrow range 5%, but the model thought we're going to have a pullback, but we didn't, right? Instead we had a breakout of this range. So Carmen, let me know if that makes sense. Thank you. Any other questions? Thank you for who haven't subscribed. Please click on subscribe if you find the content useful. First of all, we do have a closing bell broadcasted today. Second of all, please copy the link and post it on your social media. Share it with your friends. If you have, any traders or you're part of any community of traders, please share the video. That would be great. So that's YouTube. And in terms of commissions, we have partnered. We have marketing relationship with Tradier. It's a brokerage firm. Basically, if you're spending more than $10 on commissions for options trading, this basically gives you an opportunity to spend only $10. So if you're paying, let's say, $1 a contract, and you're trading more than 10 contracts a month, which average option trader does, then this could be a lot of savings depending on how many contracts do you trade. It could be thousands of dollars if you're an active option trader. If you're not active, it could be hundreds of dollars. So consider joining Tradier. joinvlad.com. I'm going to post this link. Bob is using them. He's happy. So I'm glad. I don't know if some of you are. Great tool. Thank you, Carmen. Yeah, I mean, for Stock Forecast Toolbox is a great tool, right? Because it gives you basically idea of, you know, what is considered to be overbought or oversold, right? 436, you know, great B right now, but you know that at 436, unless something happens in the market, that's overbought. If we do get close to 430 or 432, you know, that's probably oversold. And, you know, it's a 1% difference, 1.5% difference. So divided by 2, let's say. If you can consistently save 0.5% on entry and exit, then, you know, it accumulates, right? It makes a difference in your bottom line. Plus, it forces you not to chase the market. Yeah, it could go to 436. Powell says something bullish and gets to 439. It happens, but more often than not, we don't have any news that takes market out of that range, and the model is right. B, that means, you know, at least 60–70% of the time, it's going to stay within this range. Am I out on IWM bear call spread? No, I'm still in IWM. No, I have both. Bearish, so I'm still in the bearish 190 and 95 call. I mean, I rolled the legs down this week. I don't know, John, you were on vacation. So I think I closed for profit. Right. So if you were on vacation, like John, originally I did 195.200. So I did close that for 44 cents. And then I rolled the legs down because we had a sharp pullback in small cap stocks. So I rolled it down and sold it for $1.20 now. So I have both. So I have, you know, bullish 180 and 185, and now I have bearish 195, 190. $1.21, yeah. $1.20. Sold it for $1.20. All right. Any other questions? Got it. Okay. So it looks like people are digesting Powell's speech. I mean, for now, we're trading at session low. Kind of everyone is digesting what he's saying. VNQ been volatile. NFC pulled back, Transocean pulling back. Let's see how much are these calls. Do I want to close the calls? All right. So sold 51 cents. It's trading at 36 cents again. Well, if you think that level hold, then you can close it. Let's just do that. Repeat this trade. I'm going to make an assumption that spiders will hold and that crude oil will hold the 52-week low, and looks like for next, you know, it's trying to build a support. So kind of same trade. I closed the, you know, sold for 51 cents, bought for 37 cents. Now I'm buying for 36 cents. And, you know, if it rallies again, I would sell it again, right? Because I think it's going to be range-bound trading for Transocean. SH, I mean, it's inverse of spiders. As I said, spiders, I think, as long as we're trading above the slow, 431, bulls are in control. You don't really know where the top is. So as long as we're above 431, bulls are in control. That means that SH can also continue going lower, right? Once we break below this level, kind of on a large, above average volume for a day or two, then I would start thinking about maybe adding to SH. But until then, I think you just don't know where the top is. Am I in any other inverse ETF? I don't have inverse ETF. I did short VNQ in my personal account. Right, I think it's overbought. I don't think we're going to break above this 84 level, right? I think this trade over. I mean, there's some merger and acquisitions, so that's pushing the REITs higher, but I think this is the next problem in the market, right? I think this is the next, and it's not just San Francisco real estate. I think it's Chicago and New York. I mean, some areas better, right? Manhattan, it doesn't look like. But if it's not a prime location, I think real estate is an issue, and they have debt that's matured, this year and next year. And when they are forced to refinance that debt, I think it's going to create problems in REITs. Any other questions? All right, that's all I have for today. Thank you very much. Scott will do the closing bell, and I will see you tomorrow morning. Thank you. Thank you. Have a nice day. Thank you. Thanks, everybody.